Happy New Year, everybody. Welcome back. I hope you had a great weekend, are back and safe and healthy. So today is January 3rd, 2022, the first Monday market update of the new year. As always on Monday, we'll do a wrap-up of last week's action in the market and a preview of what we'll be watching for this week. First, let's do a quick wrap-up of what 2021 looked like. The markets were very strong for the year, to say the least. The Dow was up almost 21%, the NASDAQ was up 22%, and for the first time in 5 years, the S&P 500 was up more than the NASDAQ. It was up almost 27%. As I've been telling you in all last year, the sector leadership was energy, real estate, tech, and financials. Even at the bottom of the list in 2021, the boring utilities were up almost 18%, consumer staples up 18.5%, and industrials are up 21%. So recall that the best and worst sometimes change places year after year. So will there be a repeat on the leaderboard? Well, I don't know. We'll have to see. So let's wrap up last week's action now. Overall, the trading was light in volume. Many people were taking the week off, and I don't know about you guys, but I think we all deserved the week off after the year we've had again, right? So let's talk about it. Monday started with continued momentum from the previous week. Omicron news continues to show more contagious but less severe symptoms. So when the market reads that, they think less chance of lockdowns. That's what took the market up. The market was also helped by estimates of holiday shopping being at 8.5% higher year over year. Now, no one's talking about the fact that with prices up, if you buy the same goods the next year, you're going to be paying more. But let's not let facts get in the way of a good story. So as the Santa Claus rally got in full swing, most worries were put on the back burner. The S&P 500 was up 1.3% on the day. Tuesday started strong. The CDC said those infected only had to quarantine for 5 days, no longer the 10 days that they needed prior. That news was offset by Apple closing some of their stores due to Omicron, and airlines still canceling hundreds or thousands of flights. So why? Because they were understaffed due to COVID. The S&P 500 was down just a hair on the day, 0.1%. Wednesday was a stick close to the gain-loss day. Not much change in the Omicron narrative, and even while the world recorded its first 1 million Omicron case day, the market took it all in stride. Add in some Chinese property default talk, and the S&P 500 closed up just a little bit, 0.14%. Thursday began with the markets reaching for all-time highs with solid economic news and overall improvement in the sentiment on the Omicron situation worldwide. Late-day profit-taking came in, took the S&P 500 down close to just under 1/3% for the day. The year ended with a pretty quiet day on Friday as there was some last-minute positioning trading going on, but overall the S&P 500 closed pretty close to where it started the day, down about 0.25% on the day. As I mentioned, what a year, right? I'd say that there's a good reason going forward. I'd say there's a good reason why the rear view mirror in a car is much smaller than the front windshield. It's time to look forward and see what tomorrow brings, as they say. So yes, as we talk about on the Friday planning videos, we're going to continue to focus on the long term, the goals and dreams that you have for your investments. But in keeping with this video, let's talk about what we're looking at this coming week. So not to have us downshift from 2021 too quickly, 2022 starts off with a week of information that could move the market. We had manufacturing PMI today that was slightly lower than expected. And that was taking the blame for the market pulling back a bit after a strong open today. Tuesday will be the beginning of the week of labor market data. JOLTS is out. Remember, that's the number of job openings and that are available out there. So the Fed jumps back into the news on Wednesday with the minutes from the December meeting. Now, unless you've been sleeping, you're probably not going to be surprised with what you hear from the minutes from last month's meeting. But we will get a little bit more color on what some of the different voting members were thinking. But that, again, will put the Fed back up in front, which, of course, is one of the main issues for the year. How aggressive will the Fed be in fighting inflation, and how strong will inflation be in the fight? I feel like I'm watching one of those Marvel movies with, like the really strong villain and the really strong hero. Now, I'm not calling either party a villain, but just let's see how it goes. So Wednesday will also be the ADP payroll report in the morning, jobless claims as usual on Thursday morning, and we start the parade of Fed speakers. Now remember, there'll be a bunch of these coming up, so watch out, they can move the markets. Thursday is St. Louis Fed President Bullard. He's a voting member, and he has been very outspoken, so we'll have to see what he has to say. Friday is Jobs Day. Remember, that's the first Friday of every month, and the non-farm payroll number is going to be watched closely. Watch also for San Francisco Fed Fed President Daly, who is not a voting member, as well as Atlanta Fed President Bostic, who's also not a voting member. But they will be out talking. We'll see what they say. This week we'll start to set the stage. But the real market-moving news will, of course, be what happens with Omicron. If you saw in the Friday video, you'll know that I spoke about what I'm calling a synthetic lockdown. No, there does not seem to be any appetite for government-imposed lockdowns, but as so many people test positive, and even if they only have to quarantine for 5 days, that's going to hurt business. You've seen it in the airlines, you've seen it in the restaurants and the retailers. The hope is that we'll see that as many people are suggesting that this is going to burn itself out quickly and move on by the end of January. We also have to watch for Wednesday the 12th. That is the CPI number. That's the inflation number we have to pay attention to. So as we head into Jobs Week, to quote another source of my research, Kenny Polcari, investing is dynamic, so continue to pay attention. Watch for a few beginning of the year special report videos, hopefully next week. And of course, please check out the Friday planning video. Feel free to send this out and share this with others if you think they'll enjoy it. Have a great week and stay safe.